For years, Porsche felt untouchable. While most cars followed predictable depreciation curves, certain Porsche models seemed to defy gravity. Prices climbed, inventory vanished, buyers lined up with checks in hand, willing to pay almost anything just to get a build slot. But in 2024 and 2025, something changed. Quietly at first, then unmistakably, Porsche prices began to slide. And not just a little. Cayenne coupes have lost close to 40% of their value in under 2 years. Panameras aren't far behind. Even the Taycan, once the electric darling of the brand, has taken a sharp hit in barely 12 months. And at the top of the enthusiast food chain, even GT cars are no longer immune. This isn't a Porsche problem alone. It's a market correction. But Porsche is the perfect lens through which to understand how we got here and why the reset may actually be good news. When GT cars needed discounts. To understand today's market, you have to go back to the years before 2020. In 2018 and 2019, the idea of a Porsche GT3 being a guaranteed investment would have sounded absurd. A 991.2 GT3 with a sticker price around $155,000 could sit on a dealer lot for months. Buyers weren't paying premiums. They were negotiating discounts, often $25,000 to $30,000 off MSRP, just to make the deal worthwhile. These cars were desirable, yes, but they weren't scarce. They were bought by people who wanted to drive them, track them, and live with them. If you sold one a year later, breaking even was considered a win. Appreciation wasn't part of the conversation. Then the world shut down. The supply shock that changed everything. When the pandemic hit, production across the global auto industry slowed or stopped entirely. Semiconductor shortages crippled new car manufacturing. Dealer lots emptied. Waitlists exploded. For high-performance Porsches, the effect was dramatic. GT cars, already built in limited numbers, suddenly became nearly impossible to replace. Owners who had bought pre-pandemic found themselves holding assets that had effectively become scarce overnight. Auction data from 2020 to 2021 shows an unmistakable spike. Cars that once traded hands around $130,000 were suddenly selling for over $200,000. Some appreciated by $60,000 to $70,000 in a matter of months. This wasn't gradual growth. It was a shockwave. And it didn't stop there. The 992 GT3 and the era of extreme markups. When Porsche launched the 992 generation GT3, demand collided head-on with constrained supply. Dealers didn't just raise prices, they rewrote the rules. Additional dealer markups of $80,000 to $100,000 became common. Cars with MSRPs under $200,000 were transacting near $300,000. That pricing distortion didn't exist in isolation. It reshaped the entire Porsche ecosystem. If a GT3 cost $300,000, suddenly a lightly used 991.2 GT3 at $220,000 felt like a bargain, even though that same car had sold for under MSRP just a few years earlier. Buyers rationalized premiums because the alternative was waiting years or paying even more. This logic cascaded down the lineup. How GT markups inflated the entire Porsche range. When halo cars become effectively unobtainable, everything beneath them is pulled upward. A buyer who refuses to pay $300,000 for a GT3 suddenly looks at a Carrera S with a $10,000 markup and feels like they're being offered a reasonable deal. That psychological anchoring is powerful, and it reshapes perception more than logic. Dealers understood this dynamic immediately and leaned into it. Cars that historically required incentives or negotiation began carrying premiums simply because the reference point at the top had shifted so dramatically. Buyers felt an urgency to act, fearful that passing on one car meant waiting months or even years for another opportunity. Scarcity, whether genuine or manufactured, rewired consumer behavior. This pattern wasn't unique to Porsche. Luxury SUVs experienced the same distortion, with flagship off-roaders commanding six-figure premiums that made mid-tier trims with modest markups feel acceptable by comparison. Performance trucks followed an identical script. Once buyers became conditioned to seeing extreme overpricing at the top of the lineup, inflated pricing everywhere else started to feel normal. Across the industry, markups stopped being the exception and became the rule. Average new car transaction prices surged to record levels, approaching $50,000, a number unthinkable just a few years earlier. But no market can sustain that kind of artificial inflation indefinitely. When prices started falling. As production recovered and interest rates rose, demand softened. Inventory slowly returned. Suddenly, cars that had changed hands multiple times at inflated prices were being relisted, sometimes repeatedly. The data tells a clear story. One GT car sold mid-year for around $170,000, then reappeared 6 months later with the same mileage and sold for roughly $158,000. That's real depreciation, not paper losses. The trend line across auction platforms points downward. Recent sales show cars transacting at or near original sticker prices, sometimes below. What once felt impossible is now routine. The market isn't collapsing, it's normalizing. Why this correction is happening now? 4 major forces are driving the reset. Number 1, economic pressure on core buyers. High-end performance cars rely on discretionary income. Rising interest rates, tighter lending, and layoffs, especially in tech and finance, have directly affected the demographic most likely to buy 6-figure toys. Even wealthy buyers are more cautious when capital becomes expensive. Number 2, increased production volumes. Porsche has quietly increased output of GT variants. Where earlier generations felt truly rare, modern GT3 and GT3 RS production numbers are significantly higher. Over time, limited stopped, meaning scarce. Number 3, a shift in Porsche's philosophy. The brand has been vocal about prioritizing drivers over speculators. By offering more variants, RS models, spiders, track-focused trims, Porsche dilutes flipping opportunities while keeping enthusiasts engaged. Number 4, the end of speculation. During the boom, some cars were bought, stored, and resold without ever being driven. That mindset is fading. Cars are returning to their intended role. Machines meant to be used, not vaulted. What this means for enthusiasts. For real drivers, this moment is genuinely a gift. As top-tier models drift back toward rational, defensible pricing, pressure eases across the entire used market. Cars that once felt permanently out of reach, trapped behind speculative premiums and artificial scarcity, are becoming attainable again for people who actually want to own and drive them. Entry-level and mid-tier Porsches are no longer being dragged upward by the gravity of 6-figure markups at the top of the lineup. Older all-wheel drive 911s are a perfect example. Once dismissed as transitional or unexciting, they now represent honest value in a market that finally makes sense. Yes, they have quirks. Yes, they lack the screens, software, and assistance systems of newer cars. But they deliver something increasingly rare. A raw, mechanical Porsche driving experience at a price that doesn't require financial gymnastics or speculative justification. As newer models continue to depreciate, older generations will follow, slowly, unevenly, and selectively. But the direction is clear. Access is expanding, and enthusiasm is being rewarded again. The return of the driver's market. The most important shift underway isn't purely financial, it's cultural. When cars stop behaving like investment assets, owners stop treating them like museum pieces. Mileage starts to matter less. Usage starts to matter more. Track days return. Road trips happen. Communities rebuild around shared experiences instead of resale values. Cars re-enter the wild, where they were always meant to live. Porsche's long-term health depends on this balance. Brands don't survive on auction charts or appreciation graphs alone. They survive on emotional loyalty, on stories written over thousands of miles, on memories formed behind the wheel rather than behind spreadsheets. The irony is unavoidable. The same market correction that unnerves speculators is exactly what keeps the enthusiast ecosystem alive, healthy, and sustainable. What happens next? Prices may continue to soften, but a collapse is unlikely. Truly special cars will remain special. Rare specifications, manual gearboxes, and well-optioned examples will always command a premium. But the era of guaranteed appreciation, the belief that simply buying the right Porsche ensures profit, is over. That's not a failure of the market. It's a correction towards sanity. For buyers who waited patiently, opportunities are finally appearing. For owners who bought at the peak, Reality may sting, but markets have always punished excess eventually. And for everyone who loves cars for what they are, not what they're worth on paper, this moment feels long overdue. A reset that brings driving back to the center of the conversation, where it belongs. If you enjoyed this breakdown and want more honest takes on the car market, pricing trends, and what actually matters for real enthusiasts, let us know in the comments. We make these videos for people who love driving, not flipping, and there's a lot more coming as the market keeps shifting. And if you want to be smarter about cars every day, like and subscribe.